And before we check on the market in West Africa, about ₦1 trillion in T-bills issued for open market operations maturing this month. The central bank's task of mopping up liquidity in the interbank market doesn't get any easier. For the latest on the Nigerian fixed income and currency markets, we're now joined by Dare Otitoju. He's an FX trader, global market at Stanbic IBTC. Dare, thank you very much for joining us. And I think maybe a good place to start is to explain why we have ₦1 trillion worth of OMO bills maturing. That figure sounds scary given the pressure we've seen on liquidity recently.
Yeah, but some of these things have started since last year. We've had a series of maturity. I think CBN has really been struggling with mop-up since the beginning of the year. But also from last year also, we've seen, especially towards the last quarter of last year, we saw so many issuance of bonds that are maturing for the month of May. So cumulatively now we have over 1 trillion that will be maturing this month.
And this is the highest we've seen in a single month this year, am I correct?
Yeah, it is, and it's probably going to, based on the cash flow that we have seen to the end of the year, except they do something in December, it's probably going to be one of the biggest across the months that we are going to see. It's going to be the biggest.
How bad is this, if you like? Do you think the central bank is in a good position to tackle this? One imagines that they can simply just issue new bills.
Yeah, it's possible. In one hand, I think there are other factors that they have to check. They have to keep checking the fact, the pressure on exchange, to the extent that for now, well, we are very lucky now that foreign investors are not taking out the maturities that they have. So there's not too much pressure on exchange. Oil companies also have been supportive. So with that in mind, they might probably not be under that pressure. And if they are not under the pressure, they'll just do series of OMOs that will probably take it out, because at a time the banks also will be compelled to buy those bonds, to buy those T-bills at whatever levels that CBN is ready to sell.
In the latest auction for Treasury bills, we saw a return, if you like, of foreign investors to that market, and we saw yields come down as a result. Can you just talk us through the results and the key takeaways for you?
Okay, what happened is that for the short end, which is the 91 days, there was a reduction in the amounts that was sold compared to what we had in maturity. So they pushed, like we had about 42 billion, and then 22 billion was sold, and then they pushed the balance of that 20 billion up to 182 days, and then significantly also increased the 1 year. So the 1 year we have over 105 billion that matures there. Now you remember that 1 year is usually where the offshore players usually have interest. What happened last month was that because of the reduction, dropped in oil prices, we really did not see them participate actively last month. But this month, the environment looks very good for Nigeria. Oil prices are stable above 100, and so they are very comfortable to roll over. What we didn't see is that we really did not see too much of fresh injection of dollar cash, because they also have maturities.
Okay, a quick check on the naira. What I'm hearing is that it's now up to a 1-month high, and that is really driven by the flows we're seeing from the oil majors. How sustainable is this? Do you think the naira is likely to stay stable now?
No, I don't think it's something that is going to be sustainable. Like I said, you didn't see offshore exiting, and then the flows that came from both NNPC and the other oil locals was more than sufficient to cater for the domestic needs in terms of foreign exchange. And so what we have is a situation where the interbank is actually trading almost at par with effective levels of central bank.
All right, Dare,
this is expected to continue this week, but probably going into next week, where we don't expect too much of flows also in terms of dollar, we might probably see the rate inch back to 158.